riding on improved macroeconomic indicators, superior growth outlook, and a pause on interest rate hike by the Reserve Bank of India since April, Indian equities have clocked impressive double-digit gains thus far in Samvat 2079. The benchmark S&P BSE Sensex has rallied 9.5% till November 7, while the Nifty 50 has jumped 10.4%. What remained the go-to place for investors, however, were the mid and small cap stocks. At index level, the Nifty mid-cap and small-cap indices have zoomed over 30% each thus far in Samvat 2079, recording their third-best Samvat performance in 10 years. By comparison, the benchmark indices have generated their fifth lowest Samvat returns in the past 10 years.
Another highlight of the Indian market has been the sharp outperformance of mid and small-cap indices, which are up almost 30% over last 1 year. Strong earnings growth of this segment, backed by robust domestic inflows of almost $20 billion versus negative $5 billion from FIIs, has resulted in this sharp outperformance.
Domestic investors have pumped in funds worth $20 billion into Indian equities thus far in this Samvat, countering outflows worth $5 billion by their foreign counterparts. This massive inflow helped the Nifty 50 bounce from sub-17,000 levels to a record peak of 20,200. The Sensex index too recovered from 57,000 mark to nearly 68,000. In the broader markets, the Nifty mid-cap index and small-cap indices touched all-time highs of 41,680 and 13,250 levels. Individually, 43 of Nifty 500 companies vaulted between 100 and 500%, while 319 companies advanced between 50 and 100%. Among sectors, the Nifty PSU Bank Index has surged 53% thus far in the outgoing Samvat, followed by the Nifty Auto, FMCG, and Pharma indices. Analysts believe these returns are stellar given the headwinds the markets faced this year.
The US Fed eventually managed to gain control of the rising inflation by hiking the interest rates from almost 0% to 5.5% in a period of 20 months. The US bond yields, which were continuously falling, had risen during the current Samvat and have touched a peak of 5%. Geopolitical tensions between Russia and Ukraine continued to affect the markets. Apart from that, there was a new geopolitical conflict between Israel and Hamas, which is ongoing as I speak.
Rising COVID-19 cases in China and slowdown in its economy, union budget-related volatility, and Adani Hindenburg saga were some of the other headwinds for Samvat 2079. Going ahead, markets are entering the new Samvat with a narrative marked by higher for longer interest rates, volatile bond yields, geopolitical conflicts in West Asia, and fluctuating oil prices. As a strategy, analysts say every decline in the market would be a buying opportunity as strong earnings will make the markets more attractive.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She has ambitions of becoming a brand. Business Standard.